Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday as we say on the islands. It is the 9th day of January 2015 and this is the daily report for gold and silver, our weekend review, and we end up with a bang to the upside in the precious metals with gold closing up approximately $12 higher, currently trading roughly $12.20, $12.21 in that area. It has had a low of $12.0940 and a high of $12.21 even. We are right near the highs as we go into the close. Silver also closing higher on the day, up about 9 cents, $16.45. That would be our current print on the screen. When we take a look in the highs and the lows, $16.21 on the low, $16.61 on the high, closing about mid-range. We'll talk about silver in just a little bit. So traders, as I said, we are going to end the week on an up note. We still have about an hour left in trading in terms of the gold market before it closes for the weekend. Equities markets just closed. They did close lower. They closed well off of the lows of the session, but still down, I believe, about 160 to 170 points in terms of the Dow Jones Industrial Average. To gold, we are looking at a half-a-day standard candlestick chart. And traders, our daily traders know that we did enter a trade both long gold as well as silver. We did that earlier this week. We based it on a couple of factors, but primarily what we were looking at as we went to the trade, we know that this market has been moving up. It has been doing that since about November, but we've had these series of higher lows, but we haven't really gotten the higher highs yet. We kind of stalled out on this last particular clip. I believe that was about 12.23, and we entered the market roughly at 12.17, and we entered the market based upon this breakout right in here. Of course, we didn't see the follow through, and for those that watched yesterday's show as well as the day before, I did have some real concerns that we weren't seeing the kind of follow through that I had hoped to see once we broke above this resistance line. And in fact, we went back into this particular area. You can see that with these red candles right here. And my concern was that what we may be looking at is the market coming up, testing this resistance, and then coming back down to support. In other words, maintaining within this particular channel that we've identified. I also looked at a particular point, which was, I believe, 1205, and I based that on some work that we did with our Fibonacci retracement, and this is the 61% retracement, 1205. This is the shorter of the two, I believe, really going from 1252 to 1130. And I said that to me is kind of our line in the sand. We really need to see it hold above this particular price point, and we did just that. As you can see, those were our intraday lows, but nowhere really near, I believe, 1204.90 or 1204.60 was really the low that we got. We're able to hold that, and then on today's session, of course, pop back above this resistance, and I am a little bit too early in saying former resistance, but that's what I believe we might see if this market can move substantially to the upside. Now, it's doing that in light of a weaker equity market. You know, the one thing that is impeccably clear to me is that there isn't real clarity in the market. And what I mean by that is when you consider the first week of trading in 2015, we've had the Dow substantially higher and the Dow substantially lower. S&P substantially higher and substantially lower. They've been kind of meandering back and forth from very, very strong positive days to very, very strong negative days. And so you weren't getting any kind of clear direction in the equities markets. Now, as far as oil goes, I believe we did close lower on the week. Let's go ahead and pull up our oil chart. We did close lower on the week. We are at 48.24. Let's go ahead and widen this up just a little bit. This is a monthly chart. And what I'm looking for on this monthly chart, I've put in a couple of different fib retracements to see if we can make some sense of this move and where we might see oil finds some support. And based upon 76% retracements, and their different size retracements, in that one retracement, our shorter term retracement, simply takes a move from about 31 to 115. The other retracement works from about $17 all the way up to 147, and we get these longer retracement points. You can see that we had some support here. We broke through that. So to me, in terms of critical areas, we're certainly there. If we break through this, and this of course is on a technical basis, but if we break through these current lows right in here, we could actually, on a technical basis, make a playback for 30. Now, I find that hard to believe when I try to empirically digest that information, but just based upon the charts, that's what the charts are telling us. We are looking at a weekly chart of the dollar index. We talked about a couple of different levels that we had gone through. Of course, this was the triple top at 89, and when I say triple top, I'm referring to these three tops back in 2008. From there, when we looked at the market, we had a couple of different areas that we identified. One area, which was really minor, is a 38% retracement. But then if we look at this top right in here, you can see that right here, we had a secondary top. So we went ahead and we put in yet another trend line that could be resistance. Now, beginning of the week, market breaks and breaks well above this, but if you look at the close right now, it is closed right at this particular point. So whether or not it can break through this next week is something we'll have to wait to determine, but we had an up week in the dollar, but it did come off of the highs, currently at 92.16. Now, traders, when we look at the equities markets and realize this market has just been on fire, it's been on fire for quite some time. At some point, it will correct. We've had small corrections throughout these moves up, but we identified potential areas for resistance based upon a fib extension. Looking at this as wave 1, wave 2, we're currently in wave 3. If we do a fib extension of wave 1, the two real areas of concern that we would look at would be 150, 161. Of course, we'd see how it reacts at 123 and 138, but 150 and 161 typically are where we're going to look for a third wave extension, because the third wave is typically the longest of the impulse waves. Now, there's absolutely no doubt we hit a brick wall in terms of a technical area when the market came and ran up close to these particular highs. I believe the 2099, that's our 150% extension. 2093 was the actual high. So we certainly have seen a little bit of corrective pressure coming in, but certainly not in terms of percentages like what we saw back in October, where we saw the market really retrace fairly sizably. And when I say sizably, I'm talking relative to what we've seen in the market. It's been so strong, and then really pop up right in here where we went and traded to new highs. So traders, what does all of what we've seen this week really mean in terms of gold prices? Well, you can see gold is trading up on a new high on the day, trading 1222, 1223. We are looking at a weekly chart, and we are back to a point in which the price of gold is now at this upper level resistance, with the possibility, of course, of it breaking through. We are absolutely getting, if there's any kind of an apex, and there typically isn't, because we're looking at this flat bottom, so to speak, flat bottom descending top. But a break above this would be, on a technical basis, extremely significant. And traders, when we go back to our half-a-day candle chart, which I just have, you can see the market's trading roughly 1223. We also have our 76% retracement level right at this point. So we can see that that is really where we're sitting at as we go into the close. If it can muster the ability, to break through this point, we really want to see how it will track roughly at 1239, And then we really need to take out 1252, which is that former top, before we can say that this most recent rally that began in November is absolutely a key reversal or a pivot point as opposed to a counter trend. We need to take out these two areas. We have not as of yet, but we have broken above this first primary resistance line. Therefore, my recommendation, of course, is to maintain our long position in gold, maintain our long position in silver. Our stops will be adjusted Monday or Tuesday of next week, so maintain our current stops in both gold and silver. And traders, speaking about silver, of course, we're looking at a weekly chart, a standard candlestick format. Let's go ahead and kind of blow that up just a little bit. In terms of areas of resistance right now, 1720 is an area that we're identifying. We're just over our first level of resistance. And I think primary resistance, or major resistance, I should say, comes right where these bottoms are right here. It's also 76% retracement, roughly at $18 per ounce, or $1.50 from here. If we get a substantial rally in gold, my basic target is going to be to come out near the mid-17s, just below $18 per ounce. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update review. Bye-bye.